Hi guys, Tim Melvin here. I'm trying out some new technology here on StreamYard today, trying to get a better video operation up and running so we can come out with some more frequent video stuff as markets are rolling around, which is certainly the accurate description for what is going on today. Vladimir Putin, of course, has decided to roll into and recognize the two breakaway eastern Ukrainian provinces. He has also gotten Parliament in a laughable procedure to rubber stamp the use of force outside of Russia. So could be, here we go. By the way, guys, excuse the formal attire. This is my t-shirt from Mangrove Mike's down in the Keys, one of my two mandatory breakfast destinations when I'm down in Islamorada, the other being, of course, the cafe at Bud and Mary's Marina down on the southern end of Islamorada. Love both of those places. But this is a trial run, so I'm just, decided not to get all dressed up or do anything and just come to you live in my Mangrove Mike's formal attire. So listen, we don't know what's going to happen in energy right now. Oil and gas is up. Interest rates are, I'm going to say flat. The front end of the curve rates are up a little bit. On the back end, they're down a little bit in the 30-year. Oil, of course, is making another run of up over 2%, trading up around $93. Now, guys, traditional energy is something that you can find me all over the web talking about this at this various different websites. But traditional energy is something that they've been lying to you about for a couple of years now. Okay. It's not going away overnight. Renewables are not going to surge and replace traditional oil and gas. Oil and gas will still be a major fuel source in 2050, according to the U.S. Information Administration and the International Energy Agency. So we're stuck with oil and gas for good or for bad, which means that a lot of the companies that you see that they've been warning you off of are extremely cheap. They're deeply undervalued, and they're going to produce an enormous amount of cash flow thanks to very high prices. Now, when I look at traditional energy and I look at all that they're putting out there, we're going to be at net carbon by 2050. No, we're not even going to be close, guys. And if you actually read everything that went on at that conference in Scotland earlier this year, dealing with the push to get to net carbon and renewable energy, you realize that the cost of this thing was enormous. It was 150 to 176 trillion dollars, depending whose estimate you wanted to pay attention to. And a lot of it was front loaded. Doing this, making the changes that were recommended by that conference and have been discussed, and that the United States has signed off on, along with a lot of other Western nations, would require a significant reduction in everybody on the planet's standard of living. And there's also a massive, again, front end loaded transfer of wealth from the Western developed nations to emerging markets. It's the craziest thing I've ever seen. And I can't believe that we allowed ourselves to be guilted into going along with any of it. We cut our emissions immediately. China and India, well, they'll think about it. Starting, I believe it was 2040, they'll start thinking about maybe ways they can cut back. Within hours of leaving there, the Chinese government had signed contracts because of high natural gas prices just to lock up an enormous percentage of the coal in the world. They were buying it from Australia. They were buying it from the United States. They were buying it everywhere they could get it because it was much cheaper to run their economy on cheap coal than it's going to be for natural gas this year. And that's just going to be the case for a little bit of time. What's so funny is this big discussion about 100% renewables created a whole bunch of people that have cut back their natural gas production. Of course, Russia factors into this in a very big way. Germany has cut off approval of the Nord pipeline. I expect to see Russia cut off natural gas to Europe because Europe has agreed to join in the sanctions. So this all could play into it and get quite interesting in the short run. Guys, what I'm telling you, look, yes, renewables are going to grow from a very low level. They're going to be the fastest growing source of fuel, but they have their own set of problems. We're not getting to net zero by 2050, okay? Bigger percentage every year. But remember, there's environmental problems with wind farms, with fields of solar panels. They all create their own environmental hassles. And guess what? They all both take a lot of traditional carbon-based energy just to produce the products that go into the wind turbines and into the solar panels. They also use an enormous amount of rare earths metals, and there's not enough to go around, guys. Electric vehicles are using a bunch of them. The renewable energy is using a bunch of them, and China either has them within their borders, within friendly borders, or they have them on long-term contracts that are locked up for a very long time. Renewable energy and electric vehicles has turned into a race between China and the West, particularly the United States, and we are losing and losing very badly because they started thinking about this 10 years ago and we just did within the last few years. Very typical of the short-sighted policies that we've used to run this country for far too long, but waxing off into politics that don't want to do that. Guys, we've been buying all over the last year. We've been recommending and buying pipelines, MLPs, some oil and gas companies, but I got one company in particular that I'm going to tell you about because I think it's straight up a legitimate 10-bagger opportunity, and nobody's paying any attention. Understand that this is intended to be a long-term investment, a very long-term investment. If this thing goes down 10% and you're going to whine about it, please don't buy it. Okay? If it's going to go down 50% and you're going to do anything but buy more, please don't buy it. However, if you can stand those conditions, you should definitely buy this, add to it on every significant market decline, because I believe it can make you an enormous amount of money. The company is Crescent Energy. Now, backing up, gaining a little perspective here. One of the largest investors in energy has been private equity funds, with KKR being a significant player in the market. To invest with KKR, you had to have a few $1,000,000 and be willing to pay 2% annual management fees and 20% of the profits, a standard private equity fee. Now, KKR took Independence Energy, a company they owned. They combined it and they used it to buy Contango Oil and Gas, which is run by a guy named John Goff. John Goff is a legendary deal maker. He was using Crescent to roll up the oil and gas industry very effectively and efficiently. Every time there was weakness, like in 2015, 2016, he was a buyer. They were able to buy stranded assets in different places of, steady producing fields at reasonable prices as people just got out of the business thanks to regulations and low prices and a bunch of other reasons. But he was doing a pretty good job of deal making on his own. They've combined the two companies. John Goff has stayed on as the chairman of the board, and they've brought in KKR's energy team to run the combined entity. Okay, this is going to be one of KKR's primary vehicles to roll up assets and companies in the U.S. oil and gas industry. They're going to be able to do it on very advantageous prices. As we go forward, they're going to be opportunistic about it. They've kept the balance sheet at very low leverage levels to get started. They intend to keep it there. They're going to pay out a generous percentage, I believe 60% of cash flow as a dividend. Like I said, oil and gas is going to be with us for decades. They're going to build a rather large oil and gas company using the vehicle that is Crescent Energy right now, CRGY. I think you can start buying it here. On declines, you can buy more. On crashes, you can buy even more. And you can turn around one day and say, you know what? This stock actually made me kind of rich. So I really believe this has the potential to be an energy-related 10-bagger. Most of what you're hearing about renewable energy and electric vehicles, it's BS. And not that it's not going to happen, because it is going to happen. Electric vehicles will be a big deal. We're going to use more and more renewable energy, but it's not going to happen as fast as the politicians and the activists are telling you, unless they are willing to do it at gunpoint and wreck the global economy and cause, long-lasting inflation. Have you enjoyed going to the grocery store, filling up gas, any of that stuff? Has that been fun for you for the last year? Because I know it hasn't been for me, as you watch the price of everything that you like to use on a day-to-day basis climb. We bought a few dozen chicken wings the other night. It was $36 for chicken wings. It's this whole thing is reaching, insanity levels as far as inflation, you go ahead and you shoot for net carbon zero by 2050. The inflation's not going away. It's going to stay with us because of this cash that's going to flood in to all of these green energy projects, driving the cost of electricity sky high. Ask Germany what trying to go 100% renewable does to electricity costs. None of it's good. They had a lot of industry leave Germany as they worked towards that goal. So it's going to happen. It's just going to take a lot longer than they're telling you. In the meantime, traditional oil and gas, because it's been ignored, is a tremendous investment opportunity. I was talking to some folks, my son-in-law was included this morning, about some of these low price natural gas companies, liquefied natural gas companies, and even some of the super low priced offshore drillers that have recently emerged from bankruptcy. There's going to be massive opportunities in these guys because they have restructured, they've dumped off a lot of debt, and as prices go higher, offshore production is going to come back into play in a very big way. So get some energy in your portfolio. Like I said, this is going to be a time of great rotation as we get out of the story stocks and into the real businesses. Energy is a real business that is producing massive cash flows at current prices. Prices may drift up and down, but I don't think we're going to see really low oil and gas prices for a very long time, if in fact ever. So anyway, I know I usually talk about banks, but I'm also super excited about the opportunities like Crescent Energy, like some of the MLPs that I'm seeing in the oil and gas space. So I suggest that you might want to consider some of them as well as a small portion of your portfolio, of course, compared to all of the community banks that I want you to buy. So, guys, I'm Tim Melvin. We'll talk again later in the week, and maybe I'll even dress up this time.